Going concern concept or going concern assumption, this is something which all of us will see in notes to account sections of financial statements, and every accounting student would have studied this concept right at their foundational level itself. And recently, auditors of Rashtriya Ispat Nigam Limited, that is RINL, have flagged the ability of that entity to continue as a going concern. So in that context, let's touch on this concept. When financial statements are presented, entities are expected to disclose their going concern status as well. That is, whether they will continue for foreseeable future without any issues, or is there any intention to liquidate or downsize the operation. If nothing is there, then going concern assumption is valid. If there is any intention to liquidate or downsize, then we cannot say that entities have going concern status. And this will have significant impact on the accounting practices and financial reporting. Because if the going concern assumption is not valid, then it will have impact on how assets and liabilities are valued, how incomes and expenses are recognized, and how financial statements are prepared. So, if going concern assumption is not continuing, it got to be disclosed in financial statements. And that disclosure should be made by the entity, and it can also be made by auditors if they feel there are serious reasons. So that was the case with this RINL company. Auditors feel this entity may not be able to continue because of various reasons. There was a significant increase in debt. Their debt equity ratio crossed 50. That entity has cash flow problems. On a standalone basis itself, they have cash loss greater than 1900 crore. Their cash flows from operating activities are negative. They have accumulated losses. Current liabilities are greater than current assets by significant amount. And there are significant amount of claims still not acknowledged as debts. Their adjusted equity has come down from 3000 plus crore to 341 crore. Their borrowings are increasing. Equity is decreasing. There is a net loss. There is a drop in DSCR. They are operating at 2/3 of capacity only. So all these reasons raised concern for the auditors, and they flagged the ability of the entity to continue as a going concern. Of course, this is the concern of the auditor. If the management has a serious plans for revamp, they still may be able to come back strong.